Welcome back to Stocks Telegraph, the go-to channel for savvy stock market insights. In this episode, we're zeroing in on an often overlooked segment of the market, stocks priced under $2 with long-term growth potential. These under $2 stocks, often referred to as penny stocks, are known for their volatility, but they also present unique opportunities for substantial gains. With the right strategy and careful selection, investing in these low-priced stocks can be a game changer for your portfolio. Today, we've hand-picked 5 such stocks that not only boast attractive price points but also show promising growth prospects. From emerging industries to established sectors undergoing transformation, these companies are poised to break through their current valuations. Remember, investing in stocks under $2 requires a careful approach and an understanding of the higher risks involved. But for those willing to navigate these waters, the potential rewards can be significant. Don't forget to hit the subscribe button and ring the bell for notifications, so you never miss out on our latest stock market guides and tips. Get ready to delve into these hidden gems of the stock market. These are not just stocks, they're opportunities waiting to be seized by the discerning investor. Let's dive into the world of under $2 stocks that are set to soar. Kicking off our list is Heron Therapeutics Inc., trading under the ticker HRTX. This dynamic biotech company specializes in developing innovative pharmaceutical products for acute care and oncology patients. Currently priced at just 86 cents, HRTX is a stock that's flying under the radar for many investors. However, with analysts setting a mean target price of $5.62, there's a significant upside potential that's hard to ignore. The company's financial health is further bolstered by a solid gross margin of 44.77%, which is quite impressive in the biotech sector. The growth prospects for Heron Therapeutics are also noteworthy. The EPS growth for this year is a robust 44.76%, and it's expected to climb further to 58.54% next year. Additionally, the company has demonstrated a healthy quarterly earnings growth of 54.01%, signaling strong operational efficiency and market adaptability. Recently, Heron Therapeutics made headlines with its third quarter 2023 financial results. The company raised its full year 2023 net product sales guidance for its oncology care franchise to $104 million to $106 million, up from the previous estimate. This upward revision reflects confidence in its product portfolio and market demand. Moreover, Heron projects its overall 2023 net product sales to reach between $123 million and $125 million, with an even more ambitious forecast for 2024, aiming for $138 million to $158 million. This financial trajectory paints a picture of a company on the rise, making HRTX a potentially lucrative option for investors looking at long-term growth. As we delve deeper into this list of under $2 stocks, Heron Therapeutics stands out as a compelling blend of value, growth, and innovation in the biotech landscape. Next up on our list is Bitfarms Ltd., trading under the ticker BITF. This company is carving out a niche in the exciting world of cryptocurrency mining, a sector that's gaining increasing attention in the financial markets. BITF is currently trading at an accessible $1.30, but what's really catching the eye of investors and analysts alike is the potential for growth. Analysts have set a mean target price of $3 for the stock, which is a significant leap from its current value. This optimism is further justified by the stock's impressive year-to-date performance, which stands at a staggering 195.45%. When it comes to earnings, Bitfarms is showing promising signs. The EPS growth for this year is a strong 80.64%, and the company has also reported a substantial quarterly earnings growth of 83.06%. These figures indicate that Bitfarms is not just surviving in the volatile world of crypto mining but is actually thriving and growing. One of the key strategic moves for Bitfarms recently is its entry into a prepaid contract with a private power producer in Argentina. This agreement secures power for its Rio Cuarto facility at an incredibly low rate of 2.1 cents per kilowatt-hour, plus VAT, for the months from November 2023 through April 2024. This period coincides with seasonally lower natural gas prices in Argentina, allowing Bitfarms to significantly reduce its operational costs. Jeff Morphy, President and CEO of Bitfarms, emphasized the importance of this deal, noting that Argentina accounts for 23% of the company's global hash rate. This fixed-price agreement is set to substantially lower Bitfarms' blended cost of power, which is a critical factor in the profitability of cryptocurrency mining operations. Investors looking for a high-growth potential stock in the under $2 category should definitely keep an eye on Bitfarms. With its strategic initiatives to reduce costs and capitalize on the booming cryptocurrency market, BITF presents a unique opportunity for long-term investment. Continuing our exploration of promising stocks under $2, we turn to Pagaya Technologies Ltd, which operates under the ticker PAGY. Pagaya is an intriguing player in the financial industry, leveraging artificial intelligence and data networks to revolutionize the way financial services operate. Currently priced at $1.49, PAGY has been catching the eye of analysts who have set a mean target price of $3.55. This target reflects a significant potential for growth, especially considering the stock's robust performance over the last 6 months, where it has seen an increase of 72.65%. The earnings growth figures for Pagaya are equally impressive. The EPS growth for this year stands at 73.62%, with an even more optimistic projection of 89.01% growth for the next year. Additionally, the company has reported a quarterly earnings growth of 72.79%, highlighting its strong and consistent performance. Despite the broader challenges in the lending industry, particularly the impact of higher interest rates, Pagaya has managed to report increasing revenue and profitability. In the third quarter of 2023, the company saw its network volume rise to $2.1 billion, a 10% increase over the previous year and surpassing its own projections. Notably, the point-of-sale application volume, a key metric for the company, doubled sequentially from the second quarter of 2023 and increased sixfold from the first quarter. Revenue for Pagaya climbed by 4% to reach $212 million. A crucial measure of profitability for the company is its revenue from fees less production costs, which saw a 29% increase to $73 million. This metric, as a percentage of network volume, improved to 3.4%, marking the highest margin in the past 6 quarters and fitting comfortably within Pagaya's target range of 3% to 4%. Investors looking for a tech-driven financial player in the under $2 stock category should consider Pagaya Technologies. With its innovative use of AI and data analytics in the financial sector, combined with its strong financial performance and growth prospects, PAGY presents a compelling investment opportunity for those focused on long-term gains. We now delve into Esperion Therapeutics Inc., trading under the ticker ESPR, a company that stands out in the pharmaceutical industry for its focus on oral therapies for patients with elevated low-density lipoprotein cholesterol, LDLC. ESPR's current trading price is at an accessible $1.15, yet analysts have set a mean target price of a substantial $8.25, showcasing a high level of confidence in its potential growth. This optimistic outlook is bolstered by the company's impressive gross margin of 64.80% and notable growth in both earnings per share and revenue. The EPS growth this year for Esperion is 44.12%, with a promising projection of 97.20% for the next year. Additionally, the company has demonstrated a robust quarterly revenue growth of 78.97% and a quarterly earnings growth of 54.64%, indicating strong financial health and consistent performance. Esperion boasts 2 FDA-approved drugs in its commercial portfolio, Nexletol and Nexlizet, both designed for treating elevated LDLC. These drugs are marketed as Nilemdo and Nustendi in Europe and several other ex-US markets, where Esperion gains royalties on their sales. This international presence, coupled with strategic partnerships, such as the one with Daiichi Sankyo in Europe and Otsuka Pharmaceuticals in Japan for the development and commercialization of these tablets, illustrates Esperion's expansive reach and potential for growth in global markets. Investors seeking opportunities in the pharmaceutical sector, particularly those interested in companies with a focus on cardiovascular health, will find Esperion Therapeutics an intriguing choice. With its strong financial metrics, a portfolio of FDA-approved drugs, and strategic international partnerships, ESPR offers a promising investment option in the under $2 stock category, especially for those with a long-term investment perspective. We turn our attention to Denison Mines Corp., a company engaged in uranium exploration and development, trading under the ticker DNN. Denison Mines presents a unique investment opportunity in the energy sector, particularly in the realm of nuclear energy. Currently priced at $1.68, DNN is projected by analysts to reach a mean target price of $2.53, indicating a significant potential for growth. The company's performance in the last 6 months has been impressive, with an increase of 54.13%, and it boasts an extraordinary profit margin of 489.16%. These numbers reflect the company's strong financial positioning and growth potential. The earnings per share growth for this year has been remarkable at 174.59%, accompanied by a staggering quarterly earnings growth of 953.33%. This demonstrates Denison Mines' ability to generate substantial profits and expand its financial standing effectively. In its recent financial statements for the quarter ended September 30, 2023, Denison Mines reported an EPS of 7 cents for the third quarter, a commendable achievement primarily driven by a significant gain on the company's physical uranium holdings. This gain was net of operating expenses, largely related to the ongoing advancement of the company's flagship Wheeler River project. The focus on this project underlines Denison Mines' commitment to strategic growth and operational efficiency. Investors interested in the energy sector, particularly in sustainable and alternative energy sources like nuclear power, will find Denison Mines Corporation a compelling choice. With its impressive financial metrics, strategic project development, and a strong foothold in the uranium market, DNN stands out as a promising investment option in the under $2 stock category for those with a long-term outlook. With that, we've explored 5 dynamics under $2 stocks, each offering unique opportunities for long-term investment. Remember, investing in stocks requires careful consideration and a keen eye for potential growth. For more insights and updates, don't forget to subscribe to Stocks Telegraph. Happy investing and see you in the next video.